Silicon Valley Bank had 8% Tier 1 capital, above the regulatory minimum. It still failed in 48 hours. Why? Because capital ratios measure solvency. The bank failed on liquidity. Here is the regulation designed to prevent that, and why SVB was exempt from it. The Liquidity Coverage Ratio, LCR, was established under Basel III by the Bank for International Settlements, published at bis.org/bcbs/pub/d457.htm. Implemented by U.S. regulators in 2015, it requires banks to hold enough high-quality liquid assets to survive 30 days of stressed cash outflows. The formula, HQLA divided by net cash outflows over 30 days, minimum 100%. Required for banks with $250 billion or more in assets. Silicon Valley Bank, approximately $212 billion in assets, below the threshold. SVB was not required to hold 30 days of liquid assets. Here is why that exemption was fatal. SVB held $69 billion in long-duration treasury bonds, high quality but not liquid in 48 hours. When interest rates rose, those bonds lost market value. SVB had to sell them at a loss to meet deposit withdrawals. The loss announcement triggered more withdrawals, $21 billion in one day. The bank failed on the third day. An LCR-compliant bank would have held a separate pool of assets that could be sold immediately without significant loss. Cash, short-duration treasuries, reserves at the Fed. SVB held none of this in adequate quantity. The LCR requirement would have forced a buffer. The exemption removed the requirement for the buffer. After SVB's failure, the Fed and FDIC proposed extending LCR to banks with $100 billion in assets. The proposal is pending. Implementation is not expected before 2027. The gap exists today. Current oil shock at $141 increases economic stress on all industries. Bank deposits under stress when revenues fall. The LCR gap matters more during economic stress. Here is how to check your bank. Step 1. Find your bank's total assets on FDIC call report at cdr.fdic.gov. Step 2. If assets exceed $250 billion, LCR required. 8 largest U.S. banks, compliant. Step 3. If your bank is between $100 and $250 billion, it is in the gap. Proposed LCR extension not yet implemented. No requirement to hold 30 days of liquid coverage. If you hold deposits above FDIC limits at a regional bank in this range, ask your bank directly about their liquidity coverage. Check your bank's total assets at fdic.gov today. This is forensic analysis, not financial advice. If this changed how you see the financial system, there are 14 more forensic patterns exactly like this. Subscribe before the next one disappears from your feed. Capital Forensics.